Perfect. All right. Amazing. Thanks for joining, everybody. We have another great panel with us today. Have you ever borrowed money to buy a house or anything else and thought, wow, I'd really rather be the lender than the borrower? Because I mean, I definitely have. I got into private lending when I was actually a borrower to do some flips in real estate and just thought, wow, it would really be better to be the guy lending me the money. So I'm so excited to have this experienced panel of lenders with us today because, as we know, private lending can be a great way to generate income, diversify your investments, but people can get a little intimidated and think of, oh, it's really risky. What do I do to protect myself? How do we do this? So today we're going to get into a little bit of, how to vet the investor, the investment, who you're lending to, what the investment is, and do the right paperwork to protect all parties. So really important topic today. Thanks everybody for joining. I'm going to introduce our panel real quick. So we have with us today, we have Michael Shine, who is a lender and investor. He's a closing attorney, but he's also a private lender. We have Walter Amarello, who is a very experienced multifamily investor with, I can't keep count, like 600 plus units and growing, borrower, investor, lender. We have Larry Steinhaus, who is a seasoned investor, lender, and financial educator with us. So we're happy you're with us. We have Elliot Schneider, who is a private lender and investor as well. And then Crystal Mellor, who is also an investor and private lender. So everybody here has been, I think, on both sides of the lending journey. And it's going to be a great conversation. So I'm going to jump right in and just we'll go through each of these questions. We'll have each panelist kind of give your thoughts on it. The first thing I want to hear from you on is that critical step of vetting the investor. So, I mean, maybe we'll start with you, Mike, since you're on screen here. Why don't we start with you in terms of vetting the investor? What are some of the things that you do to evaluate a lender, a borrower, I mean?
Well, my lending business is very small. I said this at the summit that it was only two or three people. I think now it's up to four. Um, and so a lot of them are friends that I know, like, and trust and have known over the years, certainly gotten somebody else to vouch for them before I became friends with them and lent. So mine is not the very complicated underwriting that you might get from Elliot, yeah, when he's lending money. But mine are people that I trust, and I think I said at the summit, usually they're people that I consider a better person than I am. So if they're above me as a person, I'm certainly happy to lend to them, and it hasn't steered me wrong. So yeah.
Excellent advice. Why don't we go to Elliot next? How do you vet your borrowers?
Well, the first thing I like to do is to have conversation with them and have a relationship. I won't loan to somebody that I really don't have at least some type of a verbal relationship, maybe online communication. And then I really want to know, and I know this isn't your first question, but I want to know what the deal is. I don't want to waste a lot of time.
Sure.
So basically, I want to know the deal is. Most important, I think, at the moment is the experience level that they have. I really shy away from newbies under almost all circumstances unless somebody's working with them that's very experienced. I also want to know about what their financial situation is. Do they have an ability to if necessary, put a down payment on it? Do they have money for closing costs? Are they aware how much something like this costs monthly? And also, do they have enough reserve funds if something potentially goes wrong? And then I really want to know what their exit strategy is. Are they going to flip the property? Are they ultimately going to put it in their rental portfolio? So it's kind of a combination, but I really want to know overall through this conversation before we really go into detail if they have the ability and if the deal makes sense.
Yeah, that makes a lot of sense in terms of, you really can't vet one without the other. So I certainly understand that. And I think, you made a great point about experience. And I think a lot of lenders can get burned when they're lending to people who have no experience. So I know all of us
Right.
at least know somebody who's had that happen. Um, let's see, Walter, why don't we go to you next?
I love that I follow Mike and Elliot because I have been on the borrowing side for both Mike and Elliot. And so a lot of my lending comes from how they treated me as a lender. So the way they treated me as a borrower, I was like, oh, why did they ask that question? Okay, that's a question I'm gonna ask when I'm lending. So I was borrowing from them, always thinking one day I want to be like Elliot and like Mike doing this lending business. So I've modeled a lot of everything that they've said is exactly it comes from these guys. It comes from their experience, not my own personal experience. If I can add one though, collateral. I have done 3 loans that were non-collateralized,
Ooh.
and all 3 of them became an absolute headache for me. So anytime I've ever done non-collateralized lending, I have ended up in a headache scenario where I now have to bend to the borrower, work with the borrower, which I'm going to work with the borrower no matter what happens. But when I don't have collateral, I'm doing it really at my own risk, and that's something I've decided no longer to do. Regardless of the relationship, regardless of the story, collateral is now an absolute requirement for me. And whether that's first or second position, I know with Elliot, he's first position only. And I think one day as I graduate and grow up, I will too get to the point of being only first position. Although the second position stuff does pay me pretty well, so I do some of that as well. My
Right.
requirements are I have to be able to control the property. So it has to be right now I'm in Cleveland very heavily. I'm in Jackson, Mississippi very heavily. And it used to be Fall River was the only market I would lend in. Now I no longer lend in Fall River because I just don't have the control I used to have there. But in Cleveland and Jackson, my team is large, my units are large, my portfolios are large. If I wouldn't want to own it, I won't lend on it. So I won't lend on a duplex. I will lend on a 20 unit plus. If I felt like that was something I'd like to own and I could own, my rule is I don't want to ever take a property back from somebody, but I also, if they can't perform, I don't want it to be a bad day. I want it to be a good day for me.
That makes a lot of sense because you're planning for any eventuality, right? So it can happen even if you do all the right vetting, anything can happen and you want to be ready with, plan B, C, and D if need be, God forbid. So, all right, excellent. Thank you. Larry, how about you? What do you do to vet borrowers and or deals? We can certainly blend them together.
Yeah, you changed it now. So
I know, well,
I'm not
it
interested in
evolved.
right. I'm not interested in anything about the borrower. I'm only
Okay.
interested in the property. Look, I mean, I have a finite amount of money to lend, and same thing with these people on the panel. So yes, you're right. I mean, I want to lend to somebody I know, like, and trust, just because I want to do them a favor. But if there's no one I know, like, and trust, and someone comes up to me and they've never borrowed money before, even if it's their first deal, I don't really care. To me, all I'm interested in is the deal. If the deal will work, will the person make money on it, and is there enough collateral that if they don't pay, I am now the proud owner of a lot more money than I gave them. So that's what I look at. And
Sure.
if you evaluate the deal that way, it doesn't matter. I sometimes I even think, hey, what a great business it would be to get into, um, lending money to only newbies, right? Because now you foreclose on their property and you've made a whole lot of money. Now, I'm not saying I'm going to do that. I'm just saying, it is a way to make money. But what I'm interested in mostly is the property. That's all that matters to me. If the property has a lot of equity in it after me, I don't care. Here's property's worth 750,000. Here's a 500,000. Good luck. And if it doesn't work out, thank you very much. I just made $250,000 on my money.
Yeah, I mean, that's definitely another way to look at it too, because you do have, you have a way to come out positively in any outcome if you set it up right in the front end, right? Which is another thing we'll get into. But I want to hear from Crystal as well. I want to make sure everybody gets to speak to this part.
I feel like all the good answers have already been taken, but I was going to say something in line with Larry, that as long as the property has the value, has the equity, that's like pretty primary for me. I did lend to someone I've never even met. So, and I think the foreclosure starts tomorrow. And I'm like, okay.
Oh, sorry about that, Crystal, but wow, you learn from these things too,
Yeah,
right?
I don't know if I'm sorry. I hear it might be very good for me.
Okay.
You'll
Well,
see.
there
Larry,
you go.
We're going to
Larry,
get
have
into
you had
paperwork.
the
We're going to
Larry,
get
have
into
you had
paperwork later, right? I think, right? And
Yeah.
when I tell you how you wouldn't have had to foreclose on that if you used the paperwork that I use,
Oh.
that'll be powerful. Okay, Mike, I'm sorry.
No, I was just curious if you've actually had to take a property over.
No,
Yeah,
no,
that's
not at
what I
all.
thought. That's what
It's
I
not.
figured.
It's not. First of all, I don't lend that often anyway. I'm a borrower,
Yeah.
but I'm a borrower who protects my lenders, and protecting my lenders is the most important thing to me. I actually have millions of lenders. I shouldn't say millions of lenders. I have dozens and dozens of lenders who wish I was dead. Now, I'll
That's a
explain
lead
that.
into the paperwork.
I'll explain that a little while later. To have a
Mine are
cliffhanger.
all praying for my success, so
Yes.
I don't know if I want that energy
Well,
out
great.
there.
My lenders are praying for my death. And I'll explain that later.
Okay.
So I'm
I think
leaving a
that's a good
cliffhanger so
teaser.
the people who are listening will stay
We'll
on the
stay
line.
on.
Stay on.
I love that. That's a good teaser. All right. Well, we're going to be fair to Crystal now, so she can go first on the next one if she wants to.
Yes.
So with regards to the real estate lending and or other investments, like what are some other things like that you look at about the deal itself? And have you lent on anything besides real estate?
I've only lent on real estate and I just look at like comps or the value of the property minus what's owed on it. So essentially the equity is pretty much what it is. Try to stay stay below 70% of the equity loan to value and just proceed from there.
Excellent. Pretty straightforward then. And do you factor in what market it's in and would you want to own this property the way that Walter mentioned? Is that something that goes across your criteria or not so much?
Yes, but at the same time, I'm not maybe as selective as Walter. So I would be happy with a Fall River property. I would be happy with, taking over or getting some money from a larger property. I wouldn't really care.
Okay,
But
fair.
and done like for instance, a garage or something like a functioning mechanics garage. Like I wouldn't want to lend on that because I wouldn't want it, but just houses I would be fine with.
Okay, excellent. Thank you. I'm gonna go semi-random in the other direction. Let's see, Mike, how about you? In terms of the deal itself, because I think we didn't go into that too much when we started off.
Yeah, before the question evolved.
It morphed, yeah.
Again, I have a small stable of borrowers and usually have a conversation with them face to face. I'm blown away by Elliot because Elliot lives in Florida and he lives in two different places in Massachusetts. But every deal that he lends on, he or one of his partners will go and absolutely walk the property, which was a good lesson for me, but I had already lent in the past. But for most of mine, it's trusting my friends when they tell me what the deal is, and I obviously I look it up on online and I see what they're doing, but I've done so many like with one guy Dan I've done so many with that I just know that he knows his numbers cold. He's a builder, a framer, um, and he's way more conservative than I am. So when he asks for money, I don't lose an ounce of sleep on those. So it's mostly just talking to them and just getting a sense of what the deal is. And then if I feel that FOMO that I wish I was an equity partner, then I know I can lend on it. So yeah. Yeah.
That's a good point. That's a really good
Yeah.
point. Um, so let's move into a conversation about some of the process and the documents. So Elliot, you have the most probably how do I say this? Your process is very well oiled and you have like this is your prime like one of your primary businesses. So this is kind of like your
Hmm.
full-time thing. So walk through
Right.
for people listening, like how does it go start to finish with your borrowers coming to you?
Well, as I said in the beginning, we want to make sure, at least verbally, that they're qualified. And then verbally, I want to look at the property, perhaps on Zillow, or if they have some videos or some walkthroughs. We want to know how soon they have to close. And then we want to at least get a sense of what money is involved and, again, what their exit strategy is. At that point, in general, what we do is myself or somebody on our staff, we're going to look at that property. And as you're talking to a lot of lenders here, talking to Mike, as he said so, it's very important to look at the property if you're going to loan on it. And I've learned that the hard way. And just yesterday, to give you and I don't want to take too much time, but to give you a quick example, somebody called on a Fall River property. It was on the market for a couple hundred days. It was a two-family. All the numbers worked. They sent me some pictures. They sent me a whole bunch of stuff. But then I went down, or I sent somebody down to the property, and effectively it was on the market for 200 days because it was inaccessible. It was down this muddy road, and it literally had no parking. And so, so we decided I don't want to loan on that property because it's probably not really very, very saleable. So once we, to make it quick, once we agree, we go down, we look at the property, we agree on a figure, we agree on how much down or how much equity there is in the property. We usually get a deposit to start the legal. And Mike has done a lot of work for us, so we'll wait. We try to get it done usually within a week or two. We review the legal. We have our own set of docs that basically over the years we made so many mistakes. We've refined, and we use these, and then we just set up a closing with a closing attorney. In a lot of cases, Michael, and hope for the best. But just one other quick thing. We don't, there are a couple of different types of lenders. We try to help our clientele. We try to work with them. If they run into a little bit of trouble, we try to help them through the deal. There are other lenders that do kind of loan to own. They're happy to get it on the other end. I think in 13 years, we've only foreclosed on like 3 houses.
That's great. It's amazing. Well, probably in credit to your vetting process as well as kind of like the spirit of wanting to help out. But I think this is a good segue kind of into what are some of your docs, and then we can hear from others on the panel too about what they use in case there are differences.
Well, you're asking me. We start with an application. We then generally we get an ACH or some legal fees because if the legal is not done properly, okay, or I should say if it has a bad title or something, we don't want to get stuck paying the bills. So we always get a legal deposit. And at that point, some of the things that we're looking for that's so important to us is a good title. And what we're looking for in terms of our borrower, okay, they have to be very careful because there's a lot of these I don't want to say online, but there's a lot of auction companies now. I don't want to mention any names, or I shouldn't even say auction companies. There's a lot of large wholesalers out there, and sometimes auction companies. And so we want to make sure that we have a marketable title and an insurable title. And in some cases, and we rely very much on our attorneys to tell us that. And sometimes what will happen if you get into the wrong agreement, that company will say, we'll give you an insurable title, but it's still not very marketable unless everything is there. The other thing we absolutely insist on, and Mike will tell you that, is a plot plan. We also check because in some cases, that property is not where it's supposed to be. And I don't want to go into the whole detail, but generally a plot plan is going to give you a pretty good idea. They're only $250. I think I told you title. And again, if the title is good and the plot plan is good, and we'll ask that if we're financing construction, we're going to ask the borrower to put together at least a budget, okay? Because in general, we loan for construction. So once we have all of those things, we'll set up a closing. We have a set of docs. I think Mike would be much better in terms of legal to tell you what's in those docs than what I am, but we do a closing. And, generally, I think we're all kind of in the same price range of about 12%, couple points. We work with a lot of people in deferring them in terms of down payment. It depends. As you're aware, sometimes we'll do no down payment if there's enough equity there. But we like to get at least 20%. I think most lenders are looking for about at least that there's 70% loan to value in that property if they're going to loan on it. But again, one of the most important things is for you to go down. You need a good construction background, but you want to look at that property and you want to make sure that it's in the right place or in the right neighborhood, because if it isn't, man, it might just be not saleable and it would appraise. So that's about it.
Excellent. Very thorough. Thank you. That's really helpful. I appreciate that. So
Okay.
since we're on documents, I don't know if Mike or Larry wants to go first, because Larry definitely teased his next segment of, we have some specific ones that may not be what everybody uses, right? So what do you think?
I'm
All right.
curious to hear what Larry has to say.
Me
All right,
too.
let's go. Larry,
So,
we're all on the edge of our seat.
all right. So when I give the presentation on how to lend or borrow money, it always starts out like this, okay? And Judy, let me go to you first. And I'm a newbie. Just say I'm a newbie for a minute, okay? Hey, Judy, will you lend me $200,000 on a real estate deal?
Sure.
Right. Right. So she says yes. And you know why she says yes? Because she's polite. Right. So what typically happens is the people out there, they're looking for real estate, they're looking for money, and they say, hey, I just joined investor schooling, or I just, signed up with Walter's coaching program, or I just heard that you could borrow money from a private investor. So I'm going to go to my friend who has $200,000 and I'm going to say, hey, friend, can you lend me $200,000 on a real estate deal? And if he's polite, he'll say yes. If he's not polite, he'll say, if he's just, honest, he'll say no. Why? Because there is no real estate deal. There's just somebody saying, hey, give me $200,000, right? So when you do that, that doesn't work. If I come to you and I say, hey, will you lend me $200,000 on a piece of real estate that's worth $300,000, and if anything goes wrong with it, you can foreclose on the property. That lends you to want to lend me. Makes you closer to want to lend me the money, right? Which is great. But then I remind them all the same exact thing in the story. I said, hey, so Judy, I'm a little concerned about your foreclosure that you got coming up. But let me go to Michael on this question, and then because I don't want to scare you too much. Hey, Michael, how long does the average foreclosure take?
Oh, how long did you say?
Yeah, yeah,
Yeah, 4 to 6 months, something like that.
4 to 6 months.
Yeah.
Where do you live that it takes that fast?
Oh, Rhode Island,
That's
biggest little state in
I'm
the union.
impressed. But what people will say is, they'll start hearing horror stories. Oh my God, I knew my friend who stayed in his house for 3 or 4 or 5 years before they foreclosed on him. And I let them say that to me because I really want them to say that to me. So if I'm going to Judy and I'm saying, hey, yeah, I want to borrow money from you for a piece of real estate that's 200, that I want to borrow 200,000, but it's worth 300,000. I want to scare her again. If she's not scared, I want to make her scared. Right. So she's going to say, oh no. And then I'm going to say, Judy, you still want to lend me money? And she's going to say, well, I don't know. I don't know if I want to wait 3 or 4 years for my money. Right. And then I would say, well, what if I had something in my contract called a confession of judgment that says that if I don't pay, if I miss 3 payments, you get the property automatically. In fact, in my paperwork, it says that if I fight you on this, whether I win or lose, I'm paying your attorney's fees and my attorney's fees. So guess what I'm not going to do, Judy? There's no way I'm going to fight you. I'm no way I'm going to fight you, right? Now, let's go back to what I said earlier about I have a whole bunch of lenders that want me dead. So Judy, what did I say to you? How many payments is it that if I don't make, that you get the property?
3.
3. So if I'm dead and my family doesn't know what to do, you have this confession of judgment that says that if I miss 3 payments, you get the property. So you simply walk into a courthouse with this piece of paper and go, Larry's dead. He missed 3 payments. I want the property. And the judge says, okay. So that's what I said, that I have hundreds of, not hundreds, but dozens and dozens of lenders who want me dead. Now, they don't really want me dead. They would rather me pay. That's the joke. But the idea is I'm paying these. And if I don't pay them, they know that they have a benefit. And that's what my paperwork is. Very simple. It's a mortgage, it's a promissory note, and it's a confession of judgment. Now, it's funny because the question that you would ask that you never came to me was, hey, have you ever lent money to somebody and they haven't paid you back? all the time. But it's not the numbers that we're talking about in this presentation. So if Judy, if you came up to me, you really Judy, and me really Larry, nobody,
Yep.
and you say, hey Larry, I'm in a situation. I need $2,000. Can you lend me $2,000? I would hand you $2,000, and let me tell you what my expectations of getting paid back is.
Zero.
Zero.
Okay, let me tell you why it's zero. Let me tell you why my expectation of getting that $2,000 back is zero. Because if my expectation is anything else, I know in 6 months you and I will not be friends anymore.
Right.
So my expectation is zero. Now, if you say I'm going to give you $100 a month, I'm saying, okay, no problem. Give me $100 a month. You know what my expectations of getting $100 a month are? Zero. So if you send me $100 the first month, and you send me $100 the second month, and you don't send me on the third month or the fourth month, I'm not going to call you. I don't care. My only rule after that is if you come up to me and say, hey, I need $2,000 again, I'm sorry, I just can't do that because you didn't pay me back the first time. That's it. And this will save you so much aggravation. It'll save you from hating your family. It'll save you from hating your friends. Now, so that's my philosophy. But if it's lending on something like a piece of real estate, I want the collateral. I want the real estate as collateral. Now, there are people who will do this. They'll say, hey, I need to buy a car. Can you lend me $10,000? I'll give you the car title. And I'm going to say, no. Because the car, if they're buying the car for $10,000, they need $10,000. How much is the car worth the second they buy it?
Less, 8,000.
Maybe 8,000, right? And 6 or 9 months later, when they've already put a dent in it, and and they didn't change the tires or whatever the heck it is, or they forgot to renew their insurance, and I lent them $10,000 and they stopped paying me, I don't want their piece of junk car. So I will not lend on a car. I've had people actually ask me to lend on a car. I'm like, no, absolutely not.
That just reminded me, I have been asked to have a car as collateral. I've also been asked to have rims as a collateral.
Oh, that's funny.
And I find both. I was not interested.
That's really funny. So do you guys get approached for a lot of non-real estate based loans? I think for the most part, that's what
Not
we've been
really. I mean,
discussing
from
here,
family
but-
and friends, family and friends. That's
Only
rare, but-
only my kids.
Yeah, right, exactly. My kids don't.
Only-
My kids don't ask me
Only
to lend
everybody
money.
on Facebook.
Oh,
Every
really?
time,
Right.
yeah, I get hit with the Bitcoin mining. I get
No,
hit
that's
with
different, though.
trading bots. This
Yeah.
guy wants to start a business out in the Philippines, or this other guy wants to start a business out in Africa, Nigeria. Like I get hit all day long.
That's
every
fraud, though. That's
day.
not. We're not talking about the same thing.
No,
That's
some
fraud.
of these are legitimate because they're like it's just all I need is $2,000. All I need is $60,000. I'm starting a business where I'm going to be running turbo. I'm going to be renting out cars. I need help.
I
just
can't
getting
believe
the down
people
payment for
actually.
the first one.
People actually, yeah,
$5,000.
Let me
It's like, dude,
lend me money to buy a
no.
car for Turo. Are you kidding me?
Yeah.
Like that's the stupidest thing I've ever heard. First of all, the Toro concept isn't that great either. I mean, if you have a car and you have an extra car and you want to do Toro, that's fine. But don't go buy a brand new car and do Toro. It's not a great idea.
The only the only thing I've done a loan that was not a real estate loan was my brother's business, and my brother Amp Academy, which still obviously exists, 8 or 9 years later. And that was a $40,000 loan with, like Larry said, like no expectation of paying it back. It was like no interest rate, just like, whenever happens. It's, I love you and thank you for, being my brother. And that did come back, wonderful. Was it 40? Maybe it was 15,000. I refinanced 40. I gave him 15. I didn't question. I just said, you do what you got to do. I'm going to live my life. And later on, he paid me 15,000 back. Years later, the business is doing wonderful.
Right.
He paid it back. Then he asked for $100,000. and he was
Same
paying
day?
15% interest.
Wait, same day? Same day?
Business.
Same day?
No, this was years later. So this is a few years ago. Years later, he asked for $100,000 to buy a building, a commercial building for that business. And I lent him the $100,000 and at 15% interest, and he had that paid back within 9 months. 9
That's
months,
great.
he paid it all
Wow.
back. And
Nice.
so I'm in a rare situation of having not lent on a building and having lent to a family member where it actually did come back. And I will say that is not financial advice. My exception, the unicorn is not the law. The exception is not the rule.
Right.
But I've been very blessed in that scenario because of what Larry said, like if it didn't come back, it didn't come back, and I was okay with it.
Right.
So that's a really good point too.
But no,
Mike,
I don't like the idea of investing in anything other than or lending on anything other than real estate. The lending on real estate has always been much more peaceful for me. My brother's a sure thing for me. He's always been a sure thing for me.
well, that
Awesome.
goes back to trusting the borrower, right? And knowing who they are. But again, the expectation setting is really smart too, because you really don't want to ruin a relationship over a loan ever if it's someone that you know or
Mm.
are close to. So that's a really
Yeah.
good point. And some people really probably would prefer not to engage in business with some family members or friends too. It's very personal, I think, in terms of that piece. Um,
Absolutely.
Curious, Mike, if you can just for people who may not be as versed in some of the terminology, can you differentiate for people listening a mortgage versus a promissory note? I know most of us are very familiar with it, but maybe just in case they're not.
Oh,
Sure.
before we do that, can I just say that I want to answer the same question that Elliot got to answer that took,
Oh, sorry.
5 minutes. I have Mike do all my paperwork. So
Oh,
mortgage, no, and a personal guarantee, and Mike does it all. So
nice job.
that's the end of
Nice
my
job.
knowledge.
Oh, wait a minute.
Yeah.
So
No.
personal guarantee, you want to know what a personal guarantee is worth?
Yeah.
Nothing.
For me, it's 15 million,
Nothing.
but
When
you
you
know,
give, no, it's worth nothing, Walter, because if you're not paying one of your loans back, that means your personal finances are
I'm in way bigger
complete
problems.
mess,
Yeah.
right? So anybody who offers you a personal guarantee, you want to know something that's very funny. When they say, "I don't give you a personal guarantee," the red flag goes up because if they think that they can manipulate me with a personal guarantee, they're nuts. So
Yeah.
so right away I have a problem. I mean, if I ask for a personal guarantee and say, "Hey, and you have to give me a personal guarantee," that's different. But if they say,
I was
"And
gonna say
I'll give
you
you a
did
personal
ask for a
guarantee,"
personal guarantee,
I'm worried.
Larry.
What's that?
You did ask for a personal guarantee.
I asked for a lot in my loan to you.
Yeah, your loan has a lot involved with it.
My loan to you, my
It's
loan
very
to you.
scary documentation.
I know he probably went to him to read it. Do we want this 31 unit this badly that I got to sign this piece of paper
I
from
did
Larry?
ask her. I said, "This is 18 days of hell until this is paid back. 18 days of me not sleeping."
So
Oh
funny.
man,
Yeah.
but we got it done. We always do.
Always do. Love it.
Go ahead, Mike. I'm
Mike,
All
sorry. I
right.
just want to, define those.
So the note is you're promising to pay a certain amount. So that's the first document. It's a promissory note, just like it says. And the mortgage is attaches that note to the property. And that mortgage is what you take and you record either in the town or the county, depending on the state, so that you have proof out there so somebody can't sell the property out from under without going back to the person who lent the money. So that's like the proof there. And Larry, we always require personal guarantees when the borrower is an LLC
No,
because
so remember what I said was you're requiring it. That's fine.
yeah,
But
yeah,
if they come to me and they go, "And I'll give you a personal guarantee,"
yeah,
the red flag
doesn't
goes up.
mean
You understand the
anything.
difference?
Yeah,
Right.
yeah, yeah,
I was
That's
gonna
why I'm
say
bringing it up.
I absolutely require it because I got a lender, a
Right.
borrower right now who's in a situation, not my borrower, but they're in a situation where the properties they've borrowed against are trash. They're garbage. They're like
Yeah.
piles of nothing. And the loan is way more. And thank God for the personal guarantee because you can go after other assets that they own because
exactly.
these things, if that was what it was, like the game is over. There's nothing there. And fortunately, this is a great borrower. They're gonna allow other positions to be taken. You'll probably be moved around, but the
But
personal guarantee really, really is a
I mean,
tremendously valuable asset.
you could just shut down the LLC if it's
Yeah,
non-recourse. As soon as you do
then it's
that, you
gone. Yeah.
borrow the money, shut down the LLC, and say, well, there's no recourse. So there you go. Um, I just wanted to point something out. I learn a lot from my lenders, like what Larry just said. I mean, I'm going to put that in my toolbox, just to talk to people and say, hey, here's a thought. If you're concerned about this borrower paying, we could do this. And but actually, that came from the fact that I've learned from Elliot. We had in Rhode Island, we had, these standard notes and mortgages, but Elliot was insistent on making sure that the usury clause was proper and protected the lender. And we went back and looked at our notes, and we put that in just to protect and that. So I learned from my lenders, they're telling me what's important. So if you've ever heard me talk at the summit or on the podcast about usury, that came directly from Elliot, because Elliot was saying this is something that you should be very, very aware of as a lender. It can be like treble damage, that all kinds of stuff if you overcharge a borrower. So you think you're being nice, you're lending money, and then suddenly you get whacked because the person doesn't want to pay you back. That's a big deal. So yeah,
I have to speak to that for 1 minute, if I may.
yeah,
Yes.
And that is, talking to Mike. I mean, I learned the hard way about the Rhode Island usury law, but if you commit usury in Rhode Island, they take your principal. So if you
Wow.
loan some, exactly. So a lot of people, so that's why wherever you are, okay, you want to have a good reading on what's happening. And basically, I found that out kind of the hard way. I mean, I did rescue myself out of the situation, but so we always add something in Rhode Island. First of all, whatever penalty we have, we always make sure it's non-usurious. And we always put another clause in there that if indeed it doesn't meet the state standard of what is not usury, will make it so. So you have to be so careful because, again, Rhode Island, you commit usury, not just the interest you lose all the principal. Correct, Michael?
yep, yep.
So that's why you
Learned
need.
learned it from you.
So that's called the Rhode Island theft law.
It might be theft,
Wow.
but wow.
It is theft.
Okay.
So important
With the
because
right clause, you're safe. With the
Yeah.
right
right.
contract,
Two
it's
clauses.
okay.
One that
Two.
you make sure it's not usurious, and the second one is if some judge deems it usurious, then we're gonna lower the amount. So there you go. So yeah.
That's very smart. And it
Yeah.
does. This is why, I mean, for anyone listening, this is why it comes so down to the documentation and understanding not just the borrower and the property, but like every state has differences that you might not even know to ask about. So
Yeah.
being really aware, if you're lending to someone out of state, you don't know what you don't know at some
Yeah.
points, and
I
you have to
went
rely on.
I went to loan money to Qualter in Mississippi, and my first question was, "What's the usury law there?" And the attorney that Qualter referred me to was like, "Oh, I forgot what it was, like 50% or something like that." He says he's got one lender who charges 39% every time,
Wow.
and he says whenever he gets these deals and he just hangs his head because there's somebody out there that's charging 39% and
Wow.
they're okay with that.
Wow.
Wow,
Either
that's
that or we should
crazy.
all start lending in Mississippi.
Amen.
There's
Yeah,
the takeaway, right?
yeah, but
At
people who are
headquarters
paying
out there.
39%, they're not, you don't want to lend to them.
Yeah, yeah,
That's some Pace Morby Gator lending,
Yeah,
ultra high
exactly.
risk.
right,
Yeah,
Yeah.
right, yeah.
stay away.
So I want to ask Crystal a little more about some of the takeaways from your experience where now you have that potential foreclosure coming up. Like, what are you going to do differently after going through that when you lend again?
I guess we'll see how the foreclosure pans out. And I really can't give an answer right now because I know someone else who's lending on this same deal, and she's rather excited that it's going to foreclosure. I kind of think maybe the guy will get his act together and do the refi that he was supposed to be doing for the past 6 months. Um, I'm not worried about it. I know that probably sounds really weird, but it's about 5% of my net worth. And if I lost it, yeah, I'm sure it would sting for a minute, but like
Mhm.
then I would really buckle down on, what I'm doing and how I do it. But right now I
Yeah.
just feel like it's going to be okay.
I'm gonna go for a swim.
That's good. And it also brings up a point about not lending your last dollar, right? So making sure you're not over leveraging yourself. And one more thing that I wanted to
Shaking.
ask. briefly for anyone who wants to speak to it is different sources of the funds that you're lending. Some people lend to have like income that they can use as, taxable ordinary income, and some people lend out of their self-directed IRAs. But then I think some people also will broker other people's money. So what are you guys doing in terms of your lending? Where's the source of your funds, and what is your preference or combination?
Oh,
Anyone?
wow.
I
Yeah.
mean,
Go ahead, Mike. Yeah.
mine is a combination of a self-directed IRA. I also have a most people have a mortgage on their house. I have a home equity line of credit, and we paid that off completely. So we had these funds available. So we loaned on that money. So we're paying a little bit of interest, and we're getting more on that. And then I also just have money that came in from the law business, and that goes out there as well. So I haven't done any of the wrap mortgages like you're talking about. I went to a seminar where the guy was talking about you could get your friends to, I think Crystal's actually doing this, but she's borrowing money from her brother, I think it is, and then 9% and then loaning it at 12%. So she's making a 3% difference on that. So
Close, yeah. Close.
yeah.
Yep. So my main source of income for the lending or cash for the lending was from selling a paid off duplex that was really lagging in the return on the equity portion of it. It was paid off. I thought it was worth 400. I ended up with like 440 in my pocket after all the bills and whatnot. And if I were to lend all of that, I would have given that money a job where it's paid 4 times as much as it was when it was locked in the house. I don't lend all of it, but if I did, it would be a 4x multiple of what I was getting from it in the house. Granted, it does get taxed as income, which is kind of a downside. And I do broker my brother's money that he lent me at 8%, and I can get anywhere between 12 and 24% on that money.
Nice.
That's dangerous.
When she said 24, I was like, "Hey."
No, I mean it's dangerous to
Your
borrow money
brother.
from your brother and lend it to someone else at a higher rate.
Why?
Very dangerous.
Why?
Because now you're counting on someone else to pay you back, so you could pay your brother back, and that's a pretty tight relationship between you and your brother if he's willing to give you money.
Yeah.
I mean,
It'll
I'd
be
sooner.
I'll
And
come
it's not
over if I'm
brokering;
done.
that's arbitrage,
it'll
by
it'll
the
be
way.
a fun Thanksgiving.
Yeah, that's not.
I think it's fine as long as you
So
always have the liquidity to cover it. If you always have liquidity, no big deal.
Right.
He will
Right.
get
It's in the
paid.
document.
And this is only about 5% of my net worth as well. So
Yeah.
will be
all right.
paid. I've also co-signed on like his motorcycle loan for him. So we have that type of like very close relationship
No,
where
that's fine. But what happens if you can pay him back without this other person paying you back?
of course.
Okay, that's fine.
Yeah.
Okay.
Yeah, it's all about not over leveraging yourself, like you mentioned before. I think that is such a key. Like all these concepts are great, but if you take your last
Hmm.
dollar and put it out there, you don't have a lot of wiggle room if something goes sideways. You
Right.
really need to be cautious that way.
Right.
Yeah, my money is very similar to Mike's, except I'm working towards the HELOC. So what I did is I did a refinance on a bunch of my condos, pulled that capital out. Actually, Elliot had a first position on some of those condos, so I pulled a little bit more and paid Elliot off, and then took that at 7.7 and lent that out at 12. And that has been this nice little arbitrage, about $1 million, earning about 4.5% on it, which is a nice little chunk. When what I really see happening in the next year is I'm doing another refinance, pulling more capital out and paying a bunch of my current lenders off, and then taking another $1 million and doing the same thing. So that is where our capital comes from, is actually money paid for by other rental properties. So we borrow from our own portfolio as long as it can maintain itself. And that's where our money's actually been going. So It's paid for by the property, but I also look at it and say the money is paying for itself. So there ends up being a little extra reserve built in both accounts, which is to me a really cool scenario. Like it's money manifested from doing really good real estate deals.
I like
Excellent.
it.
Which,
And use
yeah,
that equity.
don't do this at home, but if you are very good in this business, you absolutely can do that.
Mhm.
What is the saying? Don't do this without an adult supervision.
Right? I know, that's
Um,
it.
basically, if I can answer the question,
Sure, of course.
I've been doing what Walter did, but I started years and years ago, and basically taking two things that I did. Basically taking my property, and I did have a bunch of real estate back then that I thought was just real estate. And I was able to take the equity out. And when I started off, it was about 2012 and 13, and you can borrow money at 3% and put it out there at, 12, 13, 14% easy.
Fabulous.
And so the other thing the two other things that I did, number one, I work with a bunch of investors. I started off with them. We pay them monthly. We pay them win, use, or draw. We've had the same investors for about 10, 11, 12 years now. They keep sending more and more money. I can only handle so much because I am still a relatively small lender. But we pay our investment portfolio before we even get the money. We do tie them up in a deal, but we don't make sure that the deal is subject to them getting paid. We pay them win, lose, or draw. So nobody's ever lost any money with us. And then we have obviously our own equity. And then beyond me, and I say beyond me because I'm too old to do it, is other lenders, younger lenders, have used. There are mutual funds that will give you money if you start a portfolio, if it's big enough. There's two guys I know in Massachusetts right now who have over $300 million out on the street. And basically, it comes from funds. And essentially, they pay quite a bit of money to the fund, but they work on the difference, and they generally charge a lot of fees to make up that difference. So you can either use your own equity, you can use investor equity, and if you're really get good enough over the long term, you can use a fund because they're always looking to place their money.
I want to add, Judy, I learned this from Elliot. So Elliot was the one who was standing in front of one of my buildings one day, lending to me on the building, and he said, "Yeah, this is how I started. I went and I did a HELOC on my rental property, and I was getting at 3%, and I was deploying it at 12." And ever since that conversation, I said in the back of my head, I said, "That's how wealth is built. That's how income is generated. You got
Absolutely.
to do that."
Yeah.
Mhm.
I,
It's
I had a three family I bought when I was 32, 34 years old. I paid $30,000. I bought it to live in it. Um, First marriage. I needed a place to live. I didn't realize what I was doing. Um, and essentially, I've taken so much equity out of that. Then it doesn't have a mortgage on it. I just 1031'd it for $750,000. Okay. So with
nice.
the 750, I went into another town. I bought three single families. Um, I had to spend a little bit of money. They have no mortgages on them. So now I'm getting the rental income. And then I go to the bank and I say to the bank, hey, listen, I want the equity here. They'll give me 70%. So there's another $300,000 for property I can put out in the street at like 12 or 14%. So, and you can just keep doing the same thing once you get started. And if you're a saver, and only if you're a saver, and I mean in terms of equity, and because that's how you build wealth. If you spend it all, it's gone.
So true. That's so true. Larry, how about yourself? If you're doing, I know you said you did more borrowing than lending, but for when you are lending, what source do you tap into for that?
So, so it's either it's so all right. So it would be I might go after my money, which was a weird thing, but I'm a big thing
For 18 days.
for
For
18 days,
18 days.
and he paid me back 2 days early, which was great because he had it for was 20. I don't even know, whatever, it doesn't matter. But the So I have brokered money. This is what I think it was Crystal before. I have brokered money, but I have brokered money and said, okay, I'm introducing you, the lender, to you, the borrower. You lend each other money and and the borrower gives me a fee for doing that. That was it. So now I walk away and I don't have any responsibility if there's a problem. So sometimes I'll do that. Sometimes I'll borrow money. Like I'm a like everything I do is other people's money, right? My entire life and my entire lifestyle is built on other people's money. I no longer, once I realized the power of other people's money, and I mean the power of other people's money, not just, hey, how cool is it that I borrowed 80 grand from somebody? I am now controlling millions of dollars of other people's money, in funds, in real estate, and it is amazing to me. It's quite a responsibility, and I can see how bad people can convince good people to do bad things, but I'm a good person and I convince good person to do good things. But I could see why people get suckered into a lot of these scam artists, and it
Ponzi
scares
schemes.
me. It
Yeah.
scares me how easily, even when they turn over $500,000 to me, like, here's $500,000, like, I do a double take for a minute. I'm like, wow, I mean, you know me for a month and you're handing me $500,000. You trust me that much. Now, again, I believe I am trustworthy. I believe that they're doing the right thing, but still, that's just scary. So everything I do is other people's money, and I treat other people's money better than I treat my money by far. Everything about other people's money is important to me, and I never want to hurt anybody who's given me money or lent me money, give me money to invest or lent money or lent me money.
Thank you so much.
That's
That
good
is so
borrowing.
important.
Yeah,
I think,
that's
what people, also can do as they're looking at lending is, who do you know who has lent to this person, right? Or how well do you know this person, their reputation? If you know someone else has lent to this person and they're consistently getting paid, no problems. I mean, the theme across everyone on this call today has been, people get paid back no matter what. That has been the commitment, and that's if people are not experienced in this realm of borrowing, it's scary to think that that person may not be skilled enough to keep track of it and really pay you back. So if your gut is saying no, or if you just don't know the person very well, there are so many people who do, have this down and have their systems down and will be good risks for you with the right documentation. So if your gut is saying no, listen to it is kind of what I usually go with. And as far as the people that I lend to, I think I'll be very similar to Mike. It's probably going to be a very small group. Right now it's one. Right now it's Walter. But I will tell you, like, it's going to be a small group of
there can be
people.
only one.
It could be. Really, like,
Highlander, let's go.
if beyond that, like, it would have to be someone that I really know, like, and trust, like we all say, and
Sure.
and you have to see the track record, and you have to know that they're credible, they have systems, and they have that commitment to make sure that their borrowers get paid. And if you're thinking of getting into
Yeah.
lending, you have to realize you have to be able to make that same commitment. And that's, that your people have to make that same commitment to you. And if you're looking to borrow, you have to be that person who's going to commit to paying back no matter what. So being careful not to be asking to borrow too much that you can't handle. So I know we've gone a little longer than maybe we were going to, but I want to just close this up with letting everybody kind of go down the line with maybe one takeaway, one last final tip, and how people can get in touch with you. So I appreciate everyone's time. This has been so valuable. So thank you so much. Why don't we start with, oh, go ahead, Mike.
No, I'll just start because I had just written down a couple of things.
Sure.
First of all, if you're new to this, you can loan a small amount of money. And so don't think that you right away have to be lending $200,000, $300,000. I started with my self-directed IRA loaning 25,000 because I saw someone on the other side of the table who's a friend of mine, and I just asked him. I said, "Hey, I've got this money in my account," and he said, "Yeah, next deal, we'll put it out there." So, because sometimes that can be intimidating for someone who's not in this world. And then the other one is, this may sound self-serving, but just let a professional do the docs. Don't don't feel like, don't let that stop you. I'm not doing it to say, send me your business. I'm saying a lot of people say note, mortgage, personal guarantee, all these things. It's so intimidating. But if
Don't
you
do it
have
on
a,
ChatGPT.
Yeah, don't do it on ChatGPT and don't do it on Google either.
yeah,
I've seen some of and don't do it
oh,
on
those are
Rocket
terrible.
Lawyer
Those are
too.
terrible.
I mean, I've seen some promissory notes off a Rocket Lawyer
Yeah.
that I wanted to laugh at.
Yeah. And then if you let an attorney, a local attorney, like I said, when I lent to Walter in Jackson, Mississippi, I didn't try to do those documents myself. I asked Walter for a referral to a professional in Jackson, Mississippi, and he gave me the perfect documents, and Walter paid for those documents. So I say this all the time. You might as well have a professional do it because the borrower is the one who's paying for those documents. So it's not going to cost you any money. So
As the
those are
borrower on
my
that side, I do have to tell you, Mike, you are a more affordable attorney. I did pay a little bit more for that. I can compare them now. I know what you're doing for me on every transaction, so
Hmm.
I just want to say
looking.
thank you
I'm playing the
because I've
long
seen the other
game.
side of those bills.
I'm playing the
I
long
I
game.
make the lender pay for the attorney review and the paperwork.
Yeah, there you go.
Larry's a cowboy. Let's
Uh,
put it out that way. I do want to say that as my piece, don't feel like you have to lend small dollar amounts of high volume or high interest. I do have loans that are 7% that are guaranteed. These 10-year notes, they're going to pay me forever, well, at least 10 years. If you can find yourself, especially if you're moving large dollar amounts and you want security. So Elliot, to me, is one of those people who I know if I've got 2, 3 million and I want to put it on the street and I want to get it done tomorrow, I know he'll take my money at 6, 7, 8%, and he'll deploy it out for me. So if you do have larger dollar amounts, you're saying, man, like, how do I deploy this? I don't want to do 100 single family homes. I know Elliot doesn't actually mind doing that. So knowing like the interest rate you charge is in my mind it's dependent upon how much capital you're sitting on and how much management you want to put into it. So if you're sitting on 5, 10 million to go out and try to get 12% on that is going to be cumbersome. It's going to be time consuming. You're gonna have to put a lot of work. So degrees as I run out of capital, my interest rate does go up. I found that tends to be how I've
that's funny.
operated. So
Or time. Or
when
time.
I'm sitting on everything, I'm like, oh, I can go cheaper. But
Or if you're
when
running
I
out of
start,
time. If you're
yeah,
running out of time too, that's the other one that,
oh, that's the borrower too, and the borrower's running out of time, the interest rate can go up as well.
yeah. Yeah.
Very true.
Good points. Good
And you find me
points.
on Facebook. I'm very easy to find. Or you could just reach out to Judy.
Yeah. Find me on
Sure.
Or
Yeah.
Facebook.
any of these guys on the
Facebook
call have my cell
also.
phone. Mhm.
Yep.
Facebook
Excellent.
or
Amazing.
ask Judy.
Crystal, how about you? Tips or takeaways and how to get in touch with you?
I would say as long as your documents are good and the property has equity, you're probably going to be okay, or at least that's what I feel as quite a new lender, honestly. It's only been the year 2025 that I've been lending, but it really has changed my life. Um, so I would add that part. It can change your life. And as far as getting a hold of me, Facebook, and yeah, that's really about it for me.
Amazing. Thank you so much.
Thank you.
Elliot, how about yourself? Any last takeaways for people
No,
looking to
just I
go
mean,
down this
I can tell you if you keep at it, and like Walter said, if you can keep saving that equity and keep saving that money. I mean, I just told you about that in 1981 or two, that $30,000 house is now 750,000. And I'm going to assume at the rate of inflation and what's happening today, that if you have a good piece of equity and you've saved it, you can just keep building on it. Okay. Because I don't think we might be, maybe it isn't going up as much as it did before, but it's still going up and you can take your equity out of it. I'm still going, I don't know, maybe another year or two or something like that. But if you can stay at it, it's a great business. Um, my investors are extremely happy. They don't want me to quit because we are so careful, okay, and we have so for 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 foreclosures, okay. But I might call Larry. I might start lending like he's doing. I don't know. Maybe we should join forces. Mike, can you look into that piece of paper for us?
I'm here to help, man. I'm here to help.
But it's, but if you keep, coming on this, this website and keep learning, and just you start a little bit, but be very careful because there are a lot of bad people out there and people that would take advantage of you. And you make sure you look at the property, you make sure you have a great lawyer to do the title, and you do the plot plan, and you make sure they have plenty of equity, and you check personally that they have at least the ability to pay you back. You really can't go wrong.
Amazing. Thanks. And how can people get in touch with you?
They can call you, they can call
Fair.
Walter,
Okay.
anybody really, and
Amazing.
I'm out
Thank you
there.
so much.
You're very
Appreciate you.
welcome. Okay, Judy,
Sorry, I
anytime.
think I didn't ask you for your last takeaway.
Wow. So my last takeaway is you can get a free copy of my book by texting the word hacks to 26786, where I talk about all this stuff. So if you want a free copy of my book, Elliot,
I do.
26786.
I'm doing it right now.
You send a text
Love
message
it.
to 26786 and you text the word hacks and you'll get a free copy of my book. And Walter has even read the last chapter.
Final chapter. In the
Okay.
first
I've never
paragraph.
read any else of it, but he's read the last chapter. And all of his friends tell him how good it is and how it's a Los Angeles Tribune bestseller. But Walter Amarillo doesn't feel he has the time for his friend. But I'm not insulted because I haven't read any of his books, so it's okay.
Well, that was a good
So-
twofer because it's a takeaway and how to get in touch with you. So 2 for 1. There you go.
And of course, investorschooling.com. You can go to investorschooling.com and you can learn all about that too, right?
Do you have a QR code?
You didn't see it? You want to see it?
I
Here,
did.
in case it wasn't big enough for you, there it is,
There you go.
Holy shit.
right? And
All
and of course, I
right.
run a fund called Sultan Income Fund, and what else you want me to advertise, Michael? Oh, and I have a
Yeah,
charity called Live 27.
Where do you
and
get
can-
your necklaces from?
So this one, hold on, I got to show you the shorter one. I had this one for many, many years, and I wanted another one to highlight it, right? The shorter one. So the shorter one I got at the last summit, the Millionaire Summit, the jewelry store outside.
Oh, nice.
Because when so this is the whole story. When I got Walter his watch, I'm like, I'm not sure if this is going to fit his wrist. So I brought it into the jewelry store and I said to the guy, I said, look, I think this might be too small. And he said, oh, you can adjust it here. So he actually adjusted it to fit my wrist. So I figured if it fit my wrist, it'll fit your wrist. And then while I was in there, I spent another 10 grand on jewelry.
Are we wrist brothers? We have the same size wrist?
Yes.
Awesome.
Yes, that would make
Oh
us
my gosh.
twin wrists, or not twin flames, but twin wrists. I don't know.
There you
So
go.
yeah,
Boy, it just
so the second one came from there,
love
and,
it.
and this one was a lot more expensive than this one. It's the same jewelry, but it's it's years later, and gold prices have increased so much that it was 3 times the price.
Wow.
You never know when you're on a live where you're going to go. And here we
When
are.
Larry's on, you can assume the money hacks will come up. You can absolutely assume a book.
True.
Some
I
plug
can't
will
believe
come
it's
What,
up.
that book?
There we are.
That book
Anyway,
that people should, everybody should read. And you can get a free copy of it by digital copy by texting hacks to
free is
26786.
good. It's good investment of your texting fingers. All right. Well,
Judy,
thank
if somebody
you again,
wants to get in touch
everyone.
with you, how
Thank
can they
you.
find you?
Oh, me? Facebook. Anybody who's watching probably will be able to find me on Facebook, and that's the easiest way. So
Great job, Judy. Nice job.
thank you guys for
Thank you,
joining
Judy.
this.
Yep.
Of course. Thank you so much. I appreciate you taking the time. This
Great
just
job,
is such
Judy.
a thing that I think people need to know because it's another way to diversify how you invest, but you have to be careful with it. So thank you for sharing your expertise, and we'll see you all soon.
Okay.
Very good.